Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently at 36,822, up 0.04%. Ethereum down 2.81% to 23.95. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, please know that our love and healing thoughts as a community are with you. You're not alone. The sun will come out again, and there's always hope. Crypto technical analysts understand Rule 45 very well. No alt can escape Bitcoin's gravity. Bitcoin is currently trading at 36,864, and we can see that it's getting across several resistance lines. This is really good stuff. When we looked in the last episode, we were just here. Bitcoin was testing this support line at around 35,733. And we thought, okay, it could come down and test 34,178. That's always probable. When you are looking at levels of resistance above, resistance is all about sellers sitting on top of these lines, pushing price down. We can see the sellers aren't having a really favorable run right now. In fact, what we see is accumulation. The buyers are coming in and accumulating at very good prices. What does this actually mean to Bitcoin? Well, what we've seen, we had a rejection on this higher resistance level, and the price at 38,935 was rejected. We came down to 37,406, but we didn't hold that support line, so we dropped back. We tested support again at 35,668, and we've been butting up against this particular resistance line for quite some time. It looks like price is going to make a run at 37,406 just by the actual technical nature of this setup. What does it mean? Do we go all in and try and pick the bottom? Absolutely not. Professionals always make 3 in advance probabilistic choices. What happens when it goes up, down, or sideways? Not just what happens if it goes up or if it goes down. Professionals look at all 3 things, all 3 states simultaneously. I urge you to do that. That's the professional smart money mindset in action. There's a lot of negative news out there seeking to push crypto's price downwards. So I reached out to the community on Twitter and I said, basically, what would you like me to cover? And I've had some really good responses back. I'll go through those. But what we look at when we're seeing this particular price action, there's been a lot of consolidation through this particular 36,500 level. What that is actually telling us, if Bitcoin was really weak, it would have got up to this resistance and been rejected and started to move down. That has not happened. What we've seen instead is a consolidation of price, a amassing, if you like, an accumulation by buyers. However, we're not out of the woods yet. We realistically need to get above 38,935 and preferably up to 41,933 for things to start to look positive. This is still no man's land. This is still the I don't know where I'm going zone, according to Bitcoin. We are currently under negative price pressure. Just bear that in mind. There's some concern within the general crypto community that the Competes Act of 2022 could create some problems for crypto. Let's have a look at that and what is it about. So the statement from President Biden on the America Competes Act of 2022, it's all about making supply chains stronger, reinvigorating innovation, and outcompeting China, bringing manufacturing jobs back to the US, especially semiconductors. And that's very much part and parcel of the problems with supply chains that C19 exposed. For many years, companies outsource their non-essential areas, and what we've found is outsourcing to cheaper countries can be a very big problem if the globe shuts down, and that's exactly what happened. What we see here, the Competes Act, a lot of people are worried about crypto provisions in that. Well, let's have a look at the actual act. This is the actual act itself, published January 25th, 2022. It has a modest 2,912 pages. Not bad, is it? But guess what? If you actually search through this for Bitcoin, you will get 0 matches. What about if we search for crypto? If we search for crypto, we get 3 matches. Cryptography, cryptocurrencies, and let's put these in perspective. So that first match is about quantum information science and creating quantum computers with classic cryptography. The next match is in section 30,134. Ouch, can you imagine going through 30,000 sections? Report on the implications of changes to cross-border payment and financial messaging systems. What it's basically talking about is that there is for example, an implication for cryptocurrencies, cross-border interbank payment systems, SIPs, and foreign central bank digital currencies. Notice the word foreign central bank digital currencies could erode the US's cross-border payment system. Now notice something else. This is really, really interesting. They talk about analyze how changes to global cross-border payment systems could undermine the United States national security interest. This is something that's been popping up again and again about the concept of basically looking at crypto from a national security interest perspective. I believe they've just got it from this particular section. There's a little bit more on it, and I'll come to that later. But the bottom line here is looking at the efficacy of sanctions, or the effectiveness of sanctions, countering terrorist financing and enforcing anti-money laundering provisions. Certainly crypto is part of that focus that the government has at the moment, and also foreign central bank digital currencies. It's going after everything. The third match for crypto is in section 60,201, a mere 30,000 sections later. Prohibitions or conditions on certain transmittals of funds. What we're looking at here is crypto, in specific ransomware. So subsection 6, ransomware attacks on US companies requiring payments in cryptocurrencies have increased in recent years. It's a really dumb way to get your money. Crypto is completely traceable unless you're using a privacy-based coin. With US treasuries estimating that ransomware payments in the US reached 590 million in just the first half of 2021. That's a big increase, no doubt. So how damaging is the America Competes Act of 2022 for crypto? Not really damaging at all. But there's a little bit more information to share here. January 27th, White House wants crypto rules as a matter of national security. When we look through this particular article, the Biden administration is preparing to release an executive action that will task federal agencies with regulating digital assets. The next question would be, what agencies? It's the State Department, the Treasury Department, the National Economic Council, and Council of Economic Advisors. What is the timing of this particular thing? The National Security Memorandum, expected to come in the next few weeks, is all about harmonizing the disharmonious frameworks that are actually going across the US at the moment. For example, Congress has held multiple hearings on crypto in recent months, exposing partisan divides between Republicans and Democrats on how to regulate the industry. The concept is that there's a haphazard or sort of random approach and no consensus. There's also a requirement to harmonize regulations of digital assets between countries. And of course, the US government wants its own central bank digital currency. And when a report came out from the Fed, the report said that the Fed could start working on a central bank digital currency project with support from the White House and Congress. Surprise, surprise. If you read the headline, you would think in crypto, maybe the earth is going to open up and swallow the crypto industry. But when is the timeline for all this? Here is the bottom line. The White House wouldn't issue recommendations. Agencies would be given 3 to 6 months to come up with proposals, and the White House would act as a policy coordinator. This could take half a year or more. This is why crypto technical analysts abide by Rule 98. Fact check the news. It's not good enough just to read a news headline and be reactive to it. We must dig underneath the surface and understand what is actually going on. We know that most news headlines are very sensationalistic by nature. They're designed to get you to click. They're designed to get you to subscribe. And of course to read the article. And they mainly do that by freaking people out. What we can see with the Competes Act and the national security, it's nothing more than fluff. I always love reading these news articles, and they always raise the concept, kill crypto, but introduce their own digital asset of a central bank digital currency. China did it, Russia did it, the US did it, they're all doing it. It's just part and parcel. It's almost a textbook play. On that note, you would have seen that Russia is basically stepping back from its hardcore ban as well. What we see when looking through the headlines, Putin backs crypto mining despite Bank of Russia's hard line. And we can see from Bitcoin magazine, Vladimir Putin stops a ban proposal on Bitcoin while supporting mining in Russia. Kathy Wood put out a very interesting analysis. She expects Bitcoin market capitalization in 2030 to be $28.5 trillion. What's really interesting is the component pieces of this. If you look at corporate treasuries, institutional investment, nation-state treasuries, economic settlement networks, emerging market currencies, and remittance networks, there are really good reasons to be backing Bitcoin. And of course, the Russian president understands this. He wants a slice of that pie. There's a fairly good Twitter channel called Ukraine War Report. What just came through an hour ago is CNN Senior National Security Correspondent Alexander Mercart. He said a Russian invasion is now virtually certain once the ground freezes, Biden said to Zelensky, a senior Ukrainian official. What we actually see in this, what does it actually mean? Could Ukraine withstand a Russian assault? To get an answer to this question, we need to look a little bit more about Russia. What is the size of Russia? It's all of this. It's the largest country in the world. You can see its border going through here. You can see the Ukraine here. Belarus, Lithuania, Estonia. We can see that Russia is incredibly large. So what kind of military does Russia have? And what kind of military does Ukraine have? You can see Ukraine is really, really tiny in comparison to Russia. So what is the firepower between these two? We can see how the military forces compare. Ukraine has about 1.155 million troops that it can call on. Interesting that Russia has 3 million. Remember the relative sizes of Ukraine and Russia. Fighter attack aircraft, 67 versus 1531. Attack helicopters, 34 versus 538. Tanks, 2400 versus 13,000. Armored vehicles. Coming back to Google Earth, do we expect that Russia will leave itself absolutely and utterly defenseless and put all of those military assets into Ukraine to try and attack Ukraine? Of course not. That would be absolute craziness from a military perspective. Now, why do I say that? Does Russia fear reprisal from the Ukraine? Why do particular countries have defense forces at all? They need defense forces because other countries can get their eyes on land and resources. For example, Russia has to defend a very vast territory. All of this territory needs to be defended. They can only put an absolute small fraction of their forces at any one time towards Ukraine. This is always the way in warfare. When you have a large geographic area, you need to defend it. It's just why we have military forces inside every country, unfortunately. So when we look statistically at things like this, we say, okay, so what? Russia has a lot of arms and armament, but they have to defend a massive area. Ukraine has a high concentration, and it's actually getting bolstered by various different countries and NATO. We can even see down here, US begins delivering a new batch of military aid to the Ukraine. From a crypto perspective, the Ukrainian government owns 46,351 Bitcoin, around $1.72 billion worth. One thing that we can use to detect the probability of war is gold. Gold tends to spike when there's military conflict. What do we see with gold right now? It's collapsing down. Masterclass students, you will get this when you reach TR23. What we see here is gold has been elevated and has hit resistance. Why is this? Because like myself and most political analysts and most statistical analysts or statisticians, we can understand that the probability of Russia creating a victory inside Ukraine is pretty low at the moment. It doesn't mean that Russia will not do its posturing, because Russian politics is pretty hardcore. That's why, as crypto technical analysts, we just look at the charts and we can tell people what the real news story is. So what does all of this mean for Bitcoin? We can see Bitcoin starting to try to get out from under resistance. We're not surprised, because a lot of fear is sown through these headlines. And what we do is that we go underneath them and we understand what the real structure is of the information. And we can see, no wonder the price is going in this direction. In all probability, we will break out from resistance, but bear in mind that the institutions love to push price down, especially if they're guaranteed of price actually repairing in an upwards direction. That's why we must always make our three-way decisions. Know what you will do and exactly how you will act if price goes up, goes sideways, or goes down. This is a really important thing to do with the smart money mindset. When crypto technical analysts look at the news, they apply Rule 781. Crypto technical analysis is a skill and it's a philosophy as well. The philosophy is we don't take the news headlines on their basis. We always dig in and research. We want to know what actually moves markets, and we do a lot of analysis, because crypto is just one market and all markets are interdependent. Looking quickly through the US market, and Masterclass students, you will get this copy of this live chart in TM6. We can see fear, the VIX index, spiking up. It's been reducing, but it's kind of maintaining things a little bit. We need to keep our eye on what happens in the next session. But we see when fear comes up, just like in crypto, prices go down. What do we see with the NASDAQ 100? It's finding a level of support from this particular area around the 13,820 to the 14,052 level. We can see oil prices are increasing. Bond prices are coming down. They hit a resistance level, tried to get above it, tried to turn it to support, but then collapsed down. We know bond prices and yields move inversely, and we can see yields coming up a little. What is really noticeable is gold basically fell off a cliff. What we were seeing is gold was seeking to come up to challenge this resistance around the 1866 level, but geopolitically, people are feeling much more comfortable with things and gold is retreating. When we look at the DXY, the US dollar currency index, or the DXY, what we see is that DXY has actually been increasing. It's challenging this area of resistance. When it gets through this, and it looks like it may well get through it, let's keep our eyes on what will happen. Probabilities have it going higher. A lot of people are concerned with the increase in the federal funding rate or increasing interest rates and what effect that will have on the economic system as well as crypto, because we know crypto is a lightweight in terms of market capitalization. For example, we know that at around the end of 2020, stocks globally were worth around $95 trillion. Bonds market was worth about 128 trillion, and we're just using crypto, a proxy, at 2 trillion, just to size these different markets together. When the bond market goes up, when there's a flight to safety, money leaves the stock market and leaves crypto to go and sit in the bond market where it's safer. A lot of people are really worried, how does increasing interest rates or increasing the federal funds rate, how is that going to impact the stock market? Generally, people say if interest rates go up, of course stocks will become less valuable. Of course, they say, of course it's going to be that. But let's have a deeper look into that. Okay, let's look at the economic theory, or the on-average behavior of an on-average citizen. When interest rates go up, that's why I got this little balloon here, what they're saying is the federal funds rate, which is the interest rate at which depository institutions lend funds maintained at the Federal Reserve to another depository institution overnight. Wow, you can just think of it as a short-term interest rate. What happens is that for consumers, that's the area in yellow, you can think that the rates, as interest rates go up, mortgage rates, credit card rates, loan rates, they go up the escalator. What happens at the same time? Those increased expenses will reduce disposable income. What happens then? As people have less money to spend, consumption expenditure goes down. Why is the government doing this? Because they want to reduce inflation. Because inflation erodes the purchasing power of disposable income. What is also at risk, if the government doesn't manage things properly, they will actually increase unemployment, because as spending goes down, economic activity within the system goes down with it. They have to be very, very careful about what they do. But what happens from a business perspective, this is the blue stuff here, the cost of borrowing for the business goes up the escalator, and just like a person, their expenses go up. What happens is we get a consumption impact on business and sales go down. What also happens to businesses when the short-term interest rate increases, the discount factor gets hit. Now, what is the discount factor all about? It's the thing that we discount present, or the present value of future earnings. And when companies are valued, basically they take the income stream from sales less expenses, the profitability, the earnings, discount all that back by the discount rate to the present value, and say that's the value of the company. When that happens, the discount rate goes up, the value of the company falls, and the market cap falls, and therefore the share price falls along with it because of this dynamic. What are we seeing here? The spending, reduced consumption from consumers, and the profits decreasing, the discounted cash flow valuations decreasing, share price decreases, all to fight inflation. But this can have really damaging impacts if it actually causes businesses to start to lay off people. So this is standard economic theory, and it makes a lot of sense, doesn't it? But what does the number say? What do running the numbers tell us? Dimensional Fund Advisors in April 2017 ran a study from August 1954 to December 2016 and looked at monthly changes in the effective federal funds rate, that's interest rates, to US stock market returns. Guess what they found? There is no clear correlation between stock returns and interest rate changes. It's one thing for things to make sense from a basic level. Oh, okay, things are more expensive, I have less to spend. Of course, everything's going to plummet because it's all consumption driven, but it's not consumption driven. Consumption is just one part of the equation, and markets behave differently under different conditions as well. What we can see here, there is no correlation. When you have positive correlation, it will go up like this, or negative correlation, it will go down like this. This is literally no correlation. Let's prove this out to ourselves, independent of other sources. We're going to do our own statistical analysis on this, and this is what I used to do with my students when I lectured first and second year statistics. What we can see here, this is the NASDAQ, the candlestick chart of the NASDAQ. The blue is Bitcoin. Now notice that, and I'm going to show you the funds rate. This is the federal funds effective rate. Do you notice that it's tracking the stock market? No, it's not. It's not even coming close. You can see just from your eye that there's no correlation. What about if we zoom in a little bit more? What do we see here with the federal funds effective rate? We would see if everything was just tracking the federal funds effective rate by May the 5th, 2019, that would have been the top of everything. Okay, let's do our comparison. This is about right. Now, what have the indices done? What have Bitcoin done? What has all the stock markets around the world done? They certainly didn't top. They kept on going up. And this is something that you need to bear in mind. I've just overlaid the Fed interest rate here and the NASDAQ going back to 2004. We can see as the federal fund rate goes up, the stock market also went up. As it equalized, the stock market also went up. As it came down, the stock market went up for a time, but we had the 2008 GFC, which caused the Fed to basically lower interest rates, and that short-term interest rate. So that makes a lot of sense. When you get black swans in the economic system, you see the Fed and central banks moving from this direction. Now, what happened then? The stock market came up. You can see the increase in the federal funds rate here. Did that cause the market to go down? Absolutely not. It kept on going up. But what is this period of time? For example, from the 26th of October 2015 to, for example, 18. That's quite a few years in between where the interest rates were going up and the market was going up as well. We've seen very, very low levels. Of course it needs to go up at some stage, but you can see there's absolutely no correlation between the two unless you get a black swan. The black swan is the spurious correlation cause that links the federal funds rate with the stock market. And of course, the stock market is big and it influences all other asset classifications, including crypto. Crypto technical analysts who have gone through the CryptoTradingKS Masterclass know all about this. This is covered in the trends section of the Masterclass. The link for the CryptoTradingKS Masterclass is in the description of this video. One thing that I would like to share with you, if you basically read the news headlines, it is a license to lose money. Digging below the headlines is what crypto technical analysts do. It's really, really important because news headlines tend to sow fear and doubt or fear of missing out, but whatever way it goes, it's always fear. One other point that may really help you out. we can see that the Nasdaq 100 has sold down. There's an enormous amount of technical support through this particular zone around where price is currently. Please just bear that in mind. When you look at this blue line, that's Bitcoin's price action. Sometimes Bitcoin moves with the market, sometimes it doesn't. Just be aware of that as well. When there are black swans, which occur down here, all markets tend to reset and come into alignment. Just beware of people saying that there is a 100% correlation between Bitcoin and the stock market. That is not correct statistically. When comparing Bitcoin to the transportation indexes and the airline index, we can see the airline index was doing rather well, but the recent sell-off has pushed everything down. All the transport indices have come down, but notice Bitcoin is recovering. Bitcoin always recovers first. This is a really good thing to remember. Masterclass students, you will get this in lesson TM3. We can see the inflation rate compared to Bitcoin. The 5 and 10-year inflation rate have been coming down since around the 14th of November. This is the pricing in of the rate increases, and we know rate increases don't do much, if anything, to the markets, and that's why we always crunch the numbers. We're interested in understanding what is going on. Masterclass students, you will receive this particular live chart in TM4. I believe the Fed has just done a bit of social engineering. It spooked the markets out to a degree that it's actually, without increasing interest rates, it's managed to lower inflation expectations of a forward nature. Pretty smart stuff. Looking at the Chinese property market, we can see many of the Chinese property giants, and there's over $1 trillion worth of net debt within these 7 companies. We can see their stock prices are starting to turn around. Looking at the largest firms in the Russian market, we've seen from the 15th of October 21 that the prices have been coming down, those share prices. We're seeing a bit of a rebound. It's not surprising. Gold is tanking. Russian stocks are starting to increase. This is looking increasingly like wars are not good for economic systems, and we can see this sharp uptick in price is probably reflective of the situation resolving itself. No war between Russia and Ukraine, and that's good for the rest of the world. Notice that the inflation rate in Russia is 8.4%. The interest rate in Russia is 8.5%, and the growth rate, the GDP growth rate, is negative 0.3. In the previous quarter, it was positive 3.2. This can show you how interest rates can be high and inflation rates also can be high. Masterclass students, I'll be releasing this chart in LV8 later on today. So what do we see with the crypto market, and how does all this relate to Bitcoin? And we understand no alt can escape Bitcoin's gravity. So when Bitcoin comes up, the entire crypto market will come up with it. We can see gold decreasing. That points towards a de-escalation of geopolitical events. We can see that the fear inside the market was increasing, but this could be related to many factors that have not yet factored into the market. We can see that so many of the headlines, for example, from the Competes Act, from the White House wants crypto rules as a matter of national security, to what's happening with Ukraine and Russia, to what is actually occurring with tapering, and the real bottom line that there is no clear correlation between stock returns and interest rate changes, to the upward momentum of crypto, and that simply it cannot be stopped. And looking at the federal funds effective rate over time, the reduction in inflation expectations, the repairing of Chinese property market giants, the bounce in the Russian market, and the overall structure of the US markets, it means that we're not surprised at all that Bitcoin is actually finding support through here. So many crypto influencers do not look behind the news. They certainly read it, but they don't dig into it, and they don't understand many things from a statistical nature, from a correlation nature. What we do inside our community is we do our absolute best to understand what is actually going on and then just present that without any fluff. We can see currently that the level of resistance at 37,406 is currently being rejected, but we're above a level of support playing in at 36,749. The other thing to bear in mind, when we're looking at the crypto fear and greed index, the market has been under extreme fear for nearly 3 months. It's getting tired of being under so much fear. Also, the entire crypto market is incredibly oversold. The relative strength indicator is so low, it's basically at pandemic levels. It's never been so oversold, except for massive capitulations. I also believe we're going to see a really big bounce in futures open interest, and there's a very strong correlation between the price and open interest. When price comes down, open interest is coming down as well. When price goes up, it's typical for open interest to go up as well. You can see that they tend to follow each other quite effectively. From a probability perspective, we have more positive probabilities inside the market than negative probabilities. Especially getting through all of this resistance for the second time is really, really positive for Bitcoin. We may see a big spike in open interest, especially as shorts get liquidated. So we can see things are looking really good for the crypto market and Bitcoin. There's a overweight probability that things will go up, and this could be very different from what the retail mindset thinks. That's because Zone 1 and Zone 2 are the retail mindset. Zone 3 and Zone 4 are the professional, institutional, smart money mindset zones. Everything I share with you is about Zone 3 and Zone 4. Rule 28, opportunities reset daily. Now we've got a really good comprehension of what is happening inside the crypto market and across the world. We're in a really good position now to figure out if opportunities are going to turn around for us and how to find them as well. When I look through the top 8, it's quite possible that we've already seen capitulation. This may have been the technical violation that I was talking about. It certainly went a little bit deeper than what any of us would have anticipated, but that's crypto. We always have to be aware that things can sell off much more dramatically than what we want them to. But what I see here is also a turning around. We are still under resistance, so we need to be careful of what we do. Always have your 3 strategies playing out. But as I said before, there's not many negative probabilities that we're seeing in the market at the moment. But again, always do those 3 probabilities. We can see Ethereum had a definite capitulation event. We can see Binance Coin starting to recover from that. Solana starting to recover, but not to the same degree as Binance Coin. Cardano has had that capitulation. It's looking more and more like we've actually seen the capitulation. We may have hammered in the bottom. Let's just be tentative on that, but it actually does look possible. XRP, a capitulation here, and we're seeing a consolidation around price. DOT, the same thing. And Luna, which has been doing so very, very well, has been reducing in line with Bitcoin's gravity. We often see that particular cryptos will fight Bitcoin's gravity and go up when Bitcoin is coming down. But the gravity is the gravity. It will always align. You really need to be very, very aware of this. Quite a few members of the community wanted me to look at DeFi. Here are the top 8 by market capitalization in DeFi. We can see Luna following Bitcoin's fingerprint. What I've actually done, I've done an assessment on these lines. You can see they're all kind of different. From around the 27th to around the 3rd of January, just trying to get some sort of comprehension as to what the lines are doing. We can see Luna and AVAX. Look at AVAX following Bitcoin's fingerprint to the almost T. What happens when Bitcoin repairs and does the reverse of a capitulation? It goes up and blasts through resistance levels. Yes, AVAX could do incredibly well. What do we see with Chainlink? Chainlink had a different kind of pattern. It was moving against. Bitcoin was coming down, Chainlink was going up, but gravity is absolute and it's been pulled back into alignment with that gravity. We can see Uni pull back into alignment with gravity as well. Phantom has been doing quite well, but they always get pulled back, but not so much. This is really, really strong. That's what it's telling me. Phantom is probably something that you should keep your eye on. Tezos following Bitcoin's gravity, and we can see Aave doing the same. Cake absolutely following Bitcoin's gravity. When things turn around in the crypto market, I am not going to be surprised at all if we get a week of double-digit growth. And I don't mean for the day, I mean day in, day out for quite a few days. Bitcoin and the crypto market have been suppressed by price. We can see it's been nearly 80 days of downward price momentum. When this thing turns around, it's going to turn around with a vengeance. Let's have a look at Rose, our thought experiment. Rose has just been basically consolidating, pretty much like Bitcoin. It's getting very close to turning around, but we always do our three-way decision making. What if Rose takes a spike down? What do we do then? If it keeps on going sideways, what do we do? If it goes up, what do we do? Having those answers to those questions and knowing what actions you're going to take, that's really, really important. I can't stress enough, that will separate you from losing money and making money. Turning now to the community favorites, we can see VRA, Veracity, still under resistance. Icon is going to the other side. It does look more and more like we've had a capitulation event, and we're probably seeing the bottom or the turnaround. But please be aware, crypto is so incredibly volatile. We have to assume that it's not over, but it certainly does look as though it could be. Let's have a look at Sushi. Sushi has had that capitulation event, as has IOTA. Loopring had a pretty big capitulation event, but the increase in here was quite substantial. Phantom is looking really, really good. I think Phantom could be one to watch. Audio is just consolidating after capitulation. Cartesi doing what Cartesi does, very spiky. I just wanted to pop CRO in because a couple of people in the community mentioned that they would like to see it. CRO is still under resistance. When you compare CRO to Loopring, you can see CRO has more strength in it. It's managed to come up and test this line. You can see CRO, and Loopring has had a little bit more difficulty doing that. This is quite a good thing to keep your eye on. Have a look always for strength. Strength is really important, and it's very important to keep away from weak cryptos. They just can plummet. I love to go through the comments on YouTube. We have just a spectacular community. It's really a KS extended family, and membership is open to everyone. I'd just like to say to everybody within our beautiful extended family, I appreciate you so much, and I'm so grateful that you are in not only my life, but in so many other people's lives as well. And just wanted to reach out to Chelsea. Chelsea said, definitely a life pullback, sick with C19 for several weeks. Wishing you all the health and healing, Chelsea, and our community's love and thoughts, positive healing thoughts are with you as well, as you can see from so many comments. In yesterday's video, we talked a little bit about real wealth and the three-way plan. Tales from the Man Cave had a really beautiful comment from the real wealth section in the masterclass. He really connects with the concept of abundance. Like in nature, there is enough for everyone and everything. We are not hunting down scarcity. trying to secure as much as possible for ourselves. We are worthy to be a part of it and take what we need. And the more positively we can do it, the more we can take. There's a simplicity to that which I really like. Very beautiful tales. Absolutely. All of wealth is built on contribution. Unfortunately, there's so many myths that perpetuate inside society, like I want to have a dream of not working. That doesn't work. When it comes to real wealth, the more you contribute of your special talents and special skills, your uniqueness, the better everybody in the entire planet is for that. Also, many thanks to art, money does buy certain comforts, but it cannot buy happiness. And the meditative mind said money can't buy happiness, but it helps. Yeah, it does. But if you're not in the right mindset, the money will return itself to the rightful owner. It is the way the universe works. Ken says unearned is always returned, and I believe that 100%. So very, very true. But earned is attracted as well. So when you earn whatever it is that you earn through actually applying your uniqueness into the world, you get to keep it. And not only that, it will multiply as well. It's such a beautiful concept. It's really all about abundance, just like in nature. I'd like to thank everybody that's made a comment. Unfortunately, there's so many, I can't go through them all. But I'd like to thank Philip and Vicente. Vicente says, my knowledge is multiplying every day. Fantastic. Talking about the three-way decision process, Tales from the Man Caves sees himself as part investor and part trader. CryptoTurtle says, buy at spot is the way to go. And Dinesh, it took so many years to realize this. The beautiful thing about the three-way decision process, when you know exactly what you're going to do, it doesn't matter if price goes down because you get your orders filled. If it goes sideways, you look at the market and chill and maybe accumulate if you wish. And if it goes up, you meet your profit targets and sell. Fantastic. Well done, Crypto Turtle and Aaron and KT. And David says, I always ask myself, is it better to buy from the top of the ladder or from the bottom of the ladder? Well done, David. And thanks to everyone else for their comments too. And thank you, Marco, for your really beautiful comment here. Hi, Ken. Many thanks for the valuable content shared within your great community. You have climbed the rankings of my favorite friends. Oh, how beautiful. I have never met you, but I feel like you were in my life for a long time. I feel so happy to be part of this community, family. Maybe one day it will be possible to organize somewhere a KS Crypto family members meeting. How beautiful. I am quite sure we would rent a stadium. Moving on with the masterclass, I've changed my mind on the way to apply my strategy. In the last 8 years, I've simply accumulated through a hodling strategy, but now it's clear to me that I have missed tons of opportunities. Knowledge makes people free. How very beautiful. Thank you, Marco. That's just such a lovely comment. And like Gabriel said, there's so many opportunities in the market. We can miss one, but 10 more will come. Flamingo, beautiful comment. And Rudy said, I suggest we meet in a metaverse stadium. How very cool. Thank you also to Alive to Thrive. Very beautiful. Your masterclass is remarkable. And to Beardy and to Mark as well. And just one more from Flow Exponential. The real wealth section of the masterclass is like being a single drop of water released into the ocean. So many people have found an absolute game changer. It's altered lives for the positive, and that is what it's for. So many laws are unwritten when it comes to wealth and how to keep it and how to generate it. I just love the real wealth section, and it's always before the trigger, because without real wealth, money is handed back. We don't want that. I want you to be more of a financial blessing to yourself and those you love. If you're in the masterclass and you've somehow skipped over the real wealth section, I would urge you very much to go back into it. You'll find hardcore practical advice and very practical things that will make your wealth multiply beyond what you ever imagined. And that's a real wealth, not in just terms of financial wealth, but more importantly, emotional wealth. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. And I thought today we could discuss news headlines in the comments section on YouTube. What do you think about news headlines and the news in general? What percentage of the news do you think is actually actionable, is signal, and what percentage do you think is noise? That's a really good thing to discuss as a community. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, including the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.